All right, so we'll introduce Brianna, and she's going to be our speaker today and let us know of her world inside the bookkeeping and tax and CPA world. So,
Stephanie,
and I
can you turn on
understand,
the host
yep,
sharing? Okay.
I'm going
It
to do
won't let
that.
me share the screen just yet. It
Yeah,
says it's not allowed.
okay. And so if everybody could just hit their mute button so we can hear Brianna, make co-host. Did that get you?
It did.
Okay, great.
Perfect. All right. Good morning, everybody. Brianna with Victory Accounting. We offer personal and business tax services along with bookkeeping services, which we offer on a monthly or quarterly basis. This morning, I'd like to share some helpful bookkeeping and tax tips with you guys to hopefully set you up for success for this year ahead. What better time to talk about it than in January? And as Victoria already said, she's joining us here on Zoom today. I'm still newer to the field, so I'm appreciative she joined to help with any questions I might not be able to answer. So you can feel free to post those in the chat and we'll try to get to them. And before I get started, I just want to give everybody an apology if my dog gets a little crazy. He's 2. He's sleeping right now, and I'm praying he stays that way for the majority of the meeting because he can get a little ornery sometimes. So if you hear him in the background, my apologies. So we're going to get started here. And first, we're going to talk about why bookkeeping matters and just a little bit of bookkeeping 101 for anybody who needs maybe a little refresher or who just doesn't really know what it entails. So good bookkeeping, it really isn't just about staying organized. It's about empowering your business. And that's important for everybody here, I think. Accurate books help you make informed decisions, and it also helps ensure tax compliance, which can reduce your risk of costly errors and also make tax time simpler, which, as everybody's probably diving into now and getting organized, if it's not easy right now, let's make next year a little bit smoother for you guys. And beyond that, good bookkeeping also promotes financial transparency. It's giving you accurate financial statements, which is showing you your true expenses, your true income. And that's not just important for managing your business, but it's also important because it helps maintain your credibility with lenders. We often get statement requests from our clients needing financial statements because they're in the process of getting a loan, which is another reason that some people choose to outsource their bookkeeping. So they're not having to stay on top of that, but know they can go to the appropriate person, ask for those statements, and know that it's not going to take a couple weeks to get that in order. Another reason why another bookkeeping 101 tip is it helps in detecting fraud and errors early. And it also supports your business growth and goal setting. If you have those accurate numbers, it's easier to make realistic goals. It helps you celebrate your milestones of your business growth and plan realistically for your future. So we're going to talk about some tips that can help keep your books in great shape. You need to keep your business expenses separate from your personal. And I know that can feel like a hassle to have multiple accounts, but it really is important. But before I move on, does anybody here want to share with me some ideas of what you would consider a business expense versus a personal? If you're willing to share, just go ahead and unmute yourself and give me some ideas. Nobody? Okay, I'll go to the next slide and we'll talk about this a little bit farther. So on the business side of things, depending on the business you have and what it entails, your legal and accounting fees, your materials and supplies, your work lunches with your coworkers where you're diving in, you're prepping, like Victoria and I, we could go to lunch and we could dive into how we're going to plan for this tax season to make sure we're offering our clients what they need and keeping things going smoothly. Now, on the personal side of things, you can't put your pet grooming on there. I know Fido needs, to be cleaned and that needs to be a personal thing. You can't have that as a business expense. Your personal vacations, that doesn't count. Clothes shopping, yes, you might need some new work clothes. And if you happen to get it with your logo, that would be a different situation. But just run into Kohl's for a couple of things, that's not going to seal the deal. So keeping those separate is really important. And we're going to talk about a little bit more in depth why it matters. By keeping your business and your personal accounts separate, you're protecting your personal assets because you're creating a legal boundary between your personal and your business liabilities. And once again, it also ensures your tax compliance because when you mix those funds, it can lead to inaccurate tax returns, which could mean a higher tax burden and possibly increase your risk of an IRS audit, which I'm fairly certain nobody here wants to encounter. So separating those accounts will also help give you financial clarity. It allows you to focus solely on the business, and it allows you to simplify your bookkeeping by streamlining your accounting process, especially if you don't outsource it. Obviously, if you outsource it, you want them to have it a little bit more streamlined, but there's no second guessing yourself as to what these purchases were made when you're going through, hopefully on a monthly basis, to clear these categorizations. And that dives into our second tip. We're going to talk about reconciliation. And it is probably one of the most important habits you can develop. And doing it regularly is even that much more important. And we're going to talk about why. Monthly reconciliation is really ideal in order to help you spot inefficiencies. So as an example, last year I was working on a client's books, needed to check a check to see who it was written to, and noticed that the amount that was written on the check versus what cleared the bank didn't match. We caught it early enough. Our client was able to talk to the bank. They were able to get the situation squared away. His account was showing it accurate now. His contractor got the money that the contractor deserved, and it wasn't something that got missed because we were able to check it on a regular basis. Another reason to do this monthly is catching fraud, because it happens. Raise your hand here if you've had a debit or credit card be compromised. Yep. It's not fun, right? I can still remember it was like 8 o'clock in the morning and I'm getting text messages asking if I was the one who made these purchases. Spent an hour on the phone with the bank. It's my husband's card. I can't do anything. It's a whole big deal. We don't want that. But if we can catch it earlier, especially for your business, fraudulent charges, taking money out of your account that you need for other things, more in a timely manner, it's just better for everybody. And it can also help promote security. If you're somebody who has employees, if they know that your books are being monitored on a regular basis, I mean, we always hope we're going to hire people that aren't going to steal from us or make bad decisions if we give them the opportunity to spend money through the business. But unfortunately, it does happen. And regularly reconciling can catch situations such as that and put a stop to unnecessary spending. It also helps make tax preparation much smoother. It's January 20th today. Is there anybody here who's still trying to catch up from last year to be ready for this tax season? If you are, there's no shame, there's no guilt, it happens. But to outsource your bookkeeping is a good way to stay on top of that because most people you outsource to are going to do this on a monthly basis. And then you're just that much more prepared and you're not stressed come January 20th trying to make sure everything is reconciled so you can get working on your taxes. So are we noticing a trend here that your accurate and timely bookkeeping plays a key role during tax time? Just something to think about. Moving on to tip number 3, it's manually clearing those transactions. We are living in a very technologically advanced world. AI is becoming prominent. Automation tools are being found in QuickBooks now. And automation can be great, but it's not something you should rely solely on. And we're going to talk about why. When you're able to manually review your transactions, you're able to catch anything that is a discrepancy or it's an incorrect categorization because sometimes the software doesn't always choose the right account. And some people have complex or split transactions that need just a little bit more verification. And if you just let it automatically go through, it could cost you. Without the manual oversight, it's really easy to assume that everything's fine when it's not. And the result for that is your inaccurate financial statements, which is misleading you about what your true expense cost is and what your true income is. And if you want your business to grow, that's going to be difficult. I will say though, if you're looking for a way to help speed up the process as far as clearing your transactions on a regular basis, QuickBooks has a tool where you can create a rule. So if you're in the contracting business, the electrical business, you're going to Home Depot and you're going to Lowe's and you're going to Ace. Why are you going there? You're going there to purchase materials and supplies. So in QuickBooks, you can create a rule that in the bank description, you can put Home Depot, Lowe's, and Ace, and that's supposed to be categorized as a material and supply category. But QuickBooks isn't going to handle it for you so that you can double check. Because something that can happen, and I've seen happen, some clients pay for marketing through Facebook. Well, in the word face is also the word ACE. And I have had it where QuickBooks was like, oh, this is materials and supplies because they bought it at Ace Hardware. And you do more research and you go, no, that's Facebook. So automation can be great and sometimes it really is useful. But when it comes to your business and trying to keep things on track and accurate, you want that manual oversight just to confirm. That's going to wrap up our bookkeeping side of things, 101 tips. And we're going to dive in just a little bit about tax deduction tips, and hopefully we can help save you some money and keep you compliant. What we're going to talk about first is auto expense deductions. And if you're unaware, there are two ways that you can deduct your auto expense for your business. We either have the actual expense method or the mileage method, and we're going to talk about the difference between the two. With the actual expense method, you get to take a business use percentage of the costs of your vehicle. So that's your fuel, your repairs, maintenance, parking, tolls. It's a great way to deduct your auto expense for your business. And I feel like a lot of you might actually do this next one, living up here and possibly driving a little bit more. And that's the mileage portion, which is exciting news for 2026 that the IRS did increase the rate mileage to 72.5 cents versus the 70 cents it was for 2025. So, every penny matters. You do, however, need to keep a mileage log, which is really important because the IRS can request that at any given time. So if you're somebody who's keeping a notebook in your glove box and you pull it out every time you go to drive and you'll update that Excel spreadsheet later, if that works for you, that works for you. But if you want to keep it a little bit easier on yourself, we recommend using an app. There are plenty out there and you can do your research about what works best for you. We do recommend the app called the Mile IQ. It's really easy to input your information, keeps track of your mileage, and the log's just right there. So if you were to be asked by the IRS for that log, it's really easy to get it to them. You're not trying to catch up from your notebook to your Excel spreadsheet. Talking about our second tax tip is your home office. As I'm sure a lot of us here up in the foothills, you might work from home. Working remote is a bigger deal. And working for yourself, you could possibly take a deduction on the space you use at your home. So, greetings from where I'm meeting you all from. This is a picture of my office. I do not get to deduct this because I am not a business owner. There is a way that I can reap benefits from my boss, which is something we can talk to you guys about if you'd like to schedule a consultation, if you have employees who work from home, to save you a deduction and help out your employees as well. However, for yourself, if you do have an office space inside of your home, as long as you're not claiming two offices, unless you meet clients as both, the way you would go about deducting your home office space is first you need to calculate what percentage you're using. So you would take the square footage of your office space and divide it by the total square footage of your home, and that's the percentage that you can deduct. from things like your rent or your mortgage. You can do that from your utilities. Every little bit helps. So if you're not already doing this and you're wondering if it's something that works for you, I advise you to talk to your accountant. If you'd like to dive into it more, you can give us a call and we can see if that's something that works for you. And last but not least, this is something new that and is temporary. I know we probably have a few people in here who are going to fit this, or maybe you can pass it along to your friends and loved ones. And maybe this will be something that you can take advantage of in the next couple of years while it is still a thing. However, there is a new additional standard deduction, temporary, for seniors, for starting in 2025's tax season, if you're 65 or older by the end of 2025. It's an extra $6,000 on top of your standard deduction, which is pretty great if you ask me. It only applies for the next 4 years. So from tax seasons 2025 to 2028. And here's an interesting detail. I don't know if we have any New Year's Day babies, but if you were born on New Year's Day, you will be considered 65 for tax purposes in 2025. Now, there are limits to this, income limits, so you may or may not qualify. However, if you are in that over 65 years old, this is something to talk to your accountant about to see if it does apply to you. If they're unsure about it, ask them to look into it. And if they're just giving you the runaround, it might be time to maybe see somebody else and get a second opinion to see if this is something you can take advantage of, because you might as well take advantage while you can. And as far as the income limit, it does include your taxable Social Security income. So just something to consider, and something that's exciting, at least for the next 4 years, if you fit into this age category. So to wrap things up, strong bookkeeping isn't just about compliance. It's about control, confidence, and growth of your business. Here on this slide, you can find our contact information, both email and phone numbers. The QR codes will take you to our website, our Facebook page, or our Instagram page. I really hope that you learned something from these tips. I hope that they make your bookkeeping a little bit easier, your business a lot stronger, and your tax time a little less stressful. And as I've mentioned before, here at Victory Accounting, you can schedule a free 30-minute consultation. Those do happen with Victoria to see if we're the right fit for you and your business. Keep in mind, as we are gearing into tax season, those time slots might be a little more limited. So if that is something you're wanting to consider, I would get on it sooner rather than later. Even if it's not with us, please get into contact with somebody. And if we have time for some general questions, we can take those. But if they're too specific, that might be time for the consultation.
I have just a general. How long have you and Victoria been working together?
I started for her in November of 2024, but she has been in the tax industry for longer.
Great. All right. Anybody have any questions? I know taxes and CPA is scary stuff. So, all right. Okay. All right. Well, thank you, Brianna. Lots of good information. As I said in the chat, QuickBooks is my nemesis. It thinks that it's smarter than me. It probably is smarter than me, just for the record. But sometimes it makes decisions where it's like, where did you come up with that?
Mm-hmm.
So having it manual, having it manual is definitely the way to go. So
yeah, more work, but it just gives you that little bit of peace of mind.
Yeah. And I honestly, with the businesses versus personal, I kind of feel like a massage, I should be able to write that off. Can't I write that off?
A little bit of stress relief, right?
Yes, because of the business.
Can I write off the acupuncture?
Yeah, I think you should, but I'm not an accountant or a CPA.
I do have a question about the massage thing.
Oh,
As an artist, because of the work, how I work, I get muscle spasms, can't walk right sometimes. So I've never written off a massage, but could you, in those cases, if your work is disrupting your lifestyle and you need a massage in order to get back to life?
It wouldn't be usually a business deduction. You might be able to write it off medically if like you go to your doctor and they're like, "Hey, look, like you really do need a massage on a regular basis." Then you might be able to write it off on your personal side through medical if you have enough.
Okay.
So those are definitely harder areas to get the IRS to consider a business deduction. But if
Mhm.
you get like a medical doctor to say, yes, you do need a regular massage, then you could probably write it off on your personal taxes through medical if you have enough. So
Okay.
same with the acupuncture. If you
What
get
would
like a doctor's prescription to go get acupuncture or something like that, you might be able to write it off on the medical side of your taxes.
and how do you determine what is enough?
What do you mean?
You mentioned if it's enough multiple times.
So with medical deductions, you have to have more than, I think it's 7.5% of your medical expenses being whatever your gross income is. So if let's say you make $100,000 a year, then you'd have to have seven that over $7,500 worth of medical to deduct anything. And then it's whatever's above that. So it's kind of one of those things where it's like you might be able to deduct it, but it's kind of a gray area.
Thank you.
So, yeah.
all right. So when I do my nails, because I have to show up in court with an attorney, then those are not deductible. All right.
No, usually the rule is like with clothes and nails and hair and that,
Yeah.
if you can wear it to the grocery store, then it's not considered deductible unless it has like your logo or stuff on it.
Mhm.
The only way that it can be deductible is if like you're a model and you have to have it for work,
Not
or
one of these.
you're an exotic dancer or something like
Not
that,
one of
then there's
those.
some a little bit more wiggle room, but yeah, it's hard to qualify those type of
Yeah.
things.
Yeah. Okay. Well, I am going to turn off the recording. We're still going, but I'm just going to stop.